The American bond market is amidst an endless rally, with interest rates rapidly rising. The reason behind this is not that the United States is drowning the world in higher interest rates, but rather that the country, with a debt reaching $33.5 trillion, is struggling to find someone to finance its debt. In such a situation, drastic measures are being taken, including potentially flipping the table. In the first video of the week, we will evaluate developments in American stock markets and cryptocurrencies. Let's get started. There's really an unstoppable movement in bond yields. The rise continues, and the pullbacks are quite limited. This week seemed calmer, but everything changed on Thursday night with the 30-year bond auction, which almost received no bids, leading to a sharp rise in interest rates. There's a tweet about it: no one wants to lend to America. This is because as interest rates rise, bond prices actually fall. If you hold U.S. bonds, you may incur significant losses. For example, if you invested in a 30-year U.S. bond 2 years ago and put in $100,000, your investment is now worth only $47,000. This is because when interest rates go up, bond prices go down. So if you need to sell today, you would only have $47,000 left. This high interest rate environment is putting pressure on the average person, especially in the Western financial system. Mortgage costs, in particular, have risen significantly due to high interest rates, making housing the biggest issue within inflation. The relationship between average mortgage costs and an individual's income has reached a point where it's extremely difficult to afford housing. The current situation can be described as stagflation, high inflation alongside stagnation. People are feeling the impact of inflation in their daily lives while the economy stagnates. It's a challenging situation where the cost of living keeps rising, and yet most people are struggling to make ends meet. Mortgage costs are at their highest point, and it's becoming increasingly difficult for people to meet these financial obligations. Therefore, the stagflation is not just a theoretical concept but a real issue for everyday people. However, I've been consistently negative about the Nasdaq for a long time. Why am I so negative? Because there is an effort to manipulate the world through the Nasdaq. The world's economies are indicated by it, and they try to inflate it. The tech companies are making money, but the optimism surrounding them has inflated prices way beyond their actual earnings. At some point, the manipulation has to end. This has happened before. In 2000, prior to the election, we saw this issue, and it played a big role in the stock market crash. The market crashed 2 months before the election. Look at the performance of the Nasdaq versus Treasury bonds. In 2000, there was a massive tech bubble with a 70% plus premium over performance. This optimistic pricing for the Nasdaq can't be sustained indefinitely. There will be a point where things have to balance out. There's always a turning point in such cases. Up there, somewhere, balance will never be achieved. It has to be achieved somewhere lower, with sharp corrections and significant downward adjustments.